We know Sydney's house prices have been falling, but today new figures show they're almost 15% lower than 2 years ago. The downturn has barely affected the big banks, although it's prompting possible good news for families with mortgages.
Nationally, it's the worst annual housing price fall since the global financial crisis, 7.2%.
I think the market bottoming out is still some way off.
Dig deeper and for many homeowners, the price drops are much worse. Sydney prices are 14.5% off their 2017 peak. Melbourne 10.9%, Perth 18.4% and Darwin 28%.
And it's our view we should expect dwelling values to continue falling throughout 2019.
In Sydney, average house prices are now around $880,000, down from $1.1 million at the peak. Ryde and the inner southwest suburbs are the worst affected, down around 15%. But politics hit the property markets as well.
Labor's proposed changes to capital gains tax and negative gearing is going to really dampen investment in the housing stock.
The Treasurer, alongside, used scare tactics regarding Labor's policies. But ANZ's boss concedes that tougher lending rules have made it harder to get a home loan.
They've put a bit of downward pressure on the availability of credit.
That said, ANZ's profits appear barely nicked by the housing downturn. $3.5 billion in the past half year, in line with forecast. The ongoing fall in house prices gives the Reserve Bank more reason to cut interest rates when it next meets on Tuesday next week. Money markets already are giving a 2 in 3 chance that those rates will be cut. But then the political pressure will go firmly on the big banks to pass any rate cut on in full.
It looks a little bit tougher out there. We saw the inflation number, which was essentially zero.
Ross Greenwood, 9 News.